Thanks everyone tuning in online. Let's give 3 more minutes for some registrants to tune in. The webinar will start at 7:03 sharp. Thank you. Okay, thanks everyone for joining the webinar. I'm Joey from Phillip. Today's webinar topic is navigating market uncertainty, strategic trading amid US elections and interest rate changes. As global markets brace for the upcoming US elections and potential shifts in interest rates, traders find themselves at a critical junction. These events can trigger significant market movements, particularly in sectors like precious metals and futures contracts. Understanding how these changes influence market dynamics is crucial for maximizing returns and managing risk. Before we kickstart our session, just want to do a quick introduction of Philip Nova and our ongoing promotions. We have been in the financial industry over 40 years of experiences. We are a member of Philip Capital Group and is one of the founding clearing members of Singapore Exchange Derivatives Trading (SGXDT). We have since grown to become one of the region's top brokerages for the trading of stocks, CFD, forex, futures, and commodities. Now, Philip Nova is offering Apex Gold perpetual futures, and the commission is from as low as 40 cents. The contract comes with no expiry, low margin, and with more than 20 times leverage. You can scan the QR codes to get more product details. At the same time, Philip Nova is also offering different kinds of promotions covering futures, forex, and any other products that we are offering. You can scan the QR code at left-hand side to get more information. And if you are more interested in the educational resources that we are providing, you can also scan the QR code on the right-hand side to explore the more webinars and seminars that we are offering. Before we dive into the webinar today, let's start with Sam Chong, Associate Director from Apex, who will give us an introduction to Apex. Sam, over to you.
Hi, thanks, Joey. Yeah, let me share the screen. Hi, Joey. Are you able to see the full screen, my slide?
Yes.
Okay, thanks. Yeah. Let me do a quick introduction about myself. So I'm Sam. I'm from Apex, Asia Pacific Exchange. So I'm the head of global markets and strategy. So today I'm going to do a brief introductions about the exchange itself. Yeah, so Asia Pacific Exchange, in short, Apex, is actually an international derivatives exchange in Singapore, and we are the third exchange who got the approved exchange license and the approved clearinghouse license. So we are approved by MS back in 2018, and then Apex actually offer a suite of futures contracts in digital asset, financial, commodity, and precious metal assets. Yeah, this is the product timeline that we have in the past. So back in 2018, we got the license for MF. So we launched our first product back in May 2018 on one of the palm oil futures. Then subsequently, we have launched financial futures, fuel oil futures, and then precious metal, Bitcoin. And then last year, we actually launched a gold contract in troy ounce perpetual futures. So we have more products to be launched in the pipeline. So this include like one Bitcoin futures, 10 Ether, FX perpetual futures, and silver troy ounce futures. So these are the summaries of the upcoming product that we're going to have. So let me take this chance to introduce to you guys about the new product that we have, FX perpetual gold futures contract. So these are the six points of the characters of the contract itself. Let me go through each of them in details later. So the first one will be the three contract sizes. So we offer 1 ounce, 10 ounce, and 100 ounce, three different contract sizes for different trading appetites. And then the second point is about the high leverage. So our contract actually allows about up to 40 times of uh, sorry, it's about 25 times. It's about 4% margin for now. And then this contract, there's no expiry. So it's a perpetual futures contract. It's traded like a spot contract. There's no expiry date. Number four is about no spread on the swap rate. So as you're familiar with the spot gold, there's always a swap rate, which is the overnight fees that if you are going to hold your position overnight. So the one the selling point of our contract is that there's no spread on the swap rate. So I will elaborate more later on some of the slides. So the fifth point is about LBMA benchmark that we are using to settle our this contract. So on a daily basis at 6 p.m., we are using the LBMA AM prices. So LBMA, there's a two prices. One is the AM, one is PM. So we use the morning one, which is our evening time to settle. So this is one of the reputable benchmark being used in the spot market for gold. The sixth point is about the trading fee. It's one of the lowest in the market. So let me go through the contract size. So 1 ounce is about 2005 now. Yeah, 10 ounce is 25, and then 100 ounce is one the standard size contract, 250,000 USD in contract value. Yeah, so for our contract spec, the trading hour we start at 7 a.m. Until 6 p.m. And then we have a 1.5 hour break. It started the T+1 at the 7:30 all the way until 5 a.m. So all these are in Singapore time. Yeah, so the second point is on the rollover fee, which is also the swap fee. Yeah, I mean, it's being used in the OTC market. So how we calculate the swap fee is a similar concept. So it will actually publish, we'll publish on the website. You'll be able to get it from your brokers as well. So this fee itself, it will be published on a daily basis. You use that rate and then you divide by, and then use that to times the number of positions that you have, contract size, depends on which contract you're using, you're trading, and then daily settlement, which is the LBMA price, and then you divide by 365. This is what you get on the daily swap fee. Yeah. So on the settlement side, is in US dollar. Yeah, because it's a perpetual, there's no settlement in terms of like physically settle. So you're always on the day to day, we will actually mark to market using the LBMA price. So the initial margin currently is at $93 per troy ounce. So it's about 4%. So it means that about 25 times average. So this is a short announcement that we have made back in 24 June. So we have actually shortened uh, the break hours, the recess hour. So it actually short. We open the T plus one at 7:30 instead of 8:30. So the reason behind is actually because we want to align it with the reporting of the US economic indicator and the data around most likely around like 8 to 8:30. So the next point is about the high leverage. So for gold contract, we know that it's actually relatively stable in terms of the daily price movement. Yeah, so I've done 10 years of the LBMA gold prices data compilations, which you can see that out of these 10 years, the median of the changes of the prices is only 0.5%. Means compared to other commodities that you have like crude oil, some copper and others, precious other ferrous metal, that you will see that this is relatively low. Yeah, so that's why actually the leverage is very important here. So we actually offer 25 times, which is we believe is actually good enough for traders to have a exposure on the precious metal itself. Yeah. So as you can see from the number of days with the big movement, when I say the big movement is about 1%. So any day that is more than 1% is only 11%. So every 10 days you only get 1 day of 1% movement, which is really quite stable, I would say. But of course, these few years the number probably have changed a bit. Yeah, but I mean we still you go with a longer period, I think it was still relatively stable. So in comparing the leverage to all the different platform providers and the exchanges, we are one of the highest at 25 times. Yeah. So the third point is about the expiry. So this is actually quite a unique features of the futures itself. We call it perpetual futures. There's no expiry. So there's no settlement of the contract where you don't really need to actually roll over the position. We will do the mark to market on a daily basis on the LBMA prices. And this is actually suitable for those who have actually have a want to have a longer terms of exposure, or they have a longer terms of the strategy they are using or to trade on the gold itself. So this will be actually quite cost saving in terms of like there's no need for you to roll the position from 1 month to another. So the fourth point, which is on the no spreads on the swap rate. So we know that on the swap rate itself, you will trade on some of the platforms, CFD brokers that you have. You always see there's a long and short. And a long and short, you always see there's a different number, different figures for it. So as you can always observe that let's say now the interest rate is really, US dollar is high. So you always see the long position has to pay, and then the short position will receive interest. So for this case, like I'm taking the Saxo one. So if you're going to long, you are paying 41 cents for one try hour. And if it's short, you are receiving only 28 cents for one try hour. Yeah. So that's what I meant by the spread, what the spread itself. Yeah. So that's what I see. But it's for Apex one, there's no spread itself. So it's actually zero sum game between the buyer and the seller. So you long, you pay 35 cents. You short, you get 35 cents. Yeah. So this is how it is actually able to save costs. There's no spread for you to hold overnight. So on our website, you will be able to see the rates. If you see the positive rate, means someone is paying. Yeah, so now it's positive rate for the long position. So long clients has to pay uh, the short fee to the seller, while the seller will have a negative rate which they will receive. Yeah. The fifth point is about the benchmark that we use. So the benchmark we use is LBMA AM price. So I mentioned is it's actually a benchmark price for gold delivered in London. So as we all know that London is actually the hub for the gold and silver trading. Yeah, so that is why we chose them. We use the LBMA AM prices for the settlement. The last but not least, is about the low trading fee. So for the three contract size itself, 1 ounce we are actually charging 10 cent, and then the 10 ounce is 40 cent, and 100 ounce is 1.5 US dollar. So if we use the 100 ounce divide, I mean 1.5 dollar divided by 100 ounce, you only get about 1.5 cent. So which is actually really small because uh, our one tick is actually 10 cents for the, I mean, it's also common for the most of the gold is 10 cents. Yeah, so it's actually, even you go in and out for the 100 ounce is actually less than one tick itself. So you can look at our market cap. Currently is about 30 to 50 cents for our contract. So for all the contract, the 1 ounce, 10 ounce, 100 ounce. Yeah. So this come to the end of my presentation. So if you have any questions about the product or about any points that I've made for during the presentation, right, feel free to actually text us or call us at this number, or you can actually email to us. Yeah, and you can actually go scan the QR code to go to our website to look for more information about the product as well. Yeah. So with this, I come to the end of my slides. I will pass it on to Andy, who will talk about today the main topic of today presentation.
All right. Okay. Thank you. Thank you, Sam. All right. Okay. So let me just get started. Okay. So first of all, let me know who is in the room. Okay. Let me know in the chat if you are there. Okay. Help me to type hi. Okay. Let let's have some engagement before we kickstart this session. Okay, so first of all, thank you for joining in today. Basically, in this presentation, I've prepared a lot of these slides, and these slides, right, is to actually to share with you, okay, what is the upcoming trend, okay, of this precious metal, and why, we should pay attention to this precious metal like gold. Okay, so I think, after I look at my slide deck, I also feel like investing in gold, and I see a lot of potential here. Okay, so later on this presentation, okay, will help you to understand what kind of a strategy that I prefer. Okay, if I were to were to buy gold. Okay, what kind of strategy? All right, so let's get started. Before we start, okay, since we're going to spend some time together, do allow me to share a little bit of myself. Okay, so I came from a very ordinary family. When I just started, I was just a technician. Okay, so I was not from financial industry. I didn't graduate directly from this financial degree. Okay, so initially I was just a technician working in this oil and gas industry. So that was long time ago, okay, 2005. And my first job, okay, only pay me this $920. Okay, so this $920 actually, I have to work 190 hours to earn this 920. So if you wonder, what does it take to, like be financially free, at like 30 over age, what does it takes to build $1 million business, and have $1 million portfolio. Actually it doesn't takes a rich dad to to be there. Okay, so I put in a lot of hard work. I put in a lot of this passion, on trading. Okay, and trading. And today what I'm going to share with you is how, from a technician, okay, I become a top broker and become a portfolio manager, and retire myself, in a pretty decent age. Okay, so over here, okay, I could have retired by now. Okay, I have enough money, but I still, because I really like to share, I really like to teach. So I'm actually in this financial education industry as well. Okay, so over here, during that period when I was working in this oil and gas industry, right, I was thinking, how can I make more money? Okay, how can I make more money? So I asked my colleague, okay, my colleague uncle that worked there for 30 years. I say, uncle, can you tell me, how can I make more money? Then the uncle tell me, hey, Andy, as long as you work hard, the boss will increase your salary, and then you will make more money. Or you work overtime, like you work overtime, you spend more time in the company, the boss will also give you more money. So that is the way to make money or not? Yes, lah. Okay, yes. Okay, surprisingly, that was the one way to make money. So during that period from 2005 to 2006, right, my pay increment from $920 increased to 942. Okay, so how much increase? $22 increase. And that was the $22 that changed my life. Okay, you know why? Because I realized, just having a job wasn't enough. Okay, I have to find other way to make money. Okay, so I say, what is the way to make money? Okay, people do business, they sell things, they buy things and sell things, they do trading. People invest money into different assets class, into property, into stocks, into gold, into different assets class. So I have to become a investor. I have to become a business owner. I cannot be just an employee, right? Okay, because employee, what do? We depend on our boss to give us the pay rise. We depend on our boss to like us, to appreciate our hard work, and then increase our salary. So my salary only increased $22, and I realized I have to upgrade myself. Okay, so what do I upgrade myself? How do I upgrade myself? I start to learn about trading. Okay, I developed passion, and then I also went to invest in myself. I attend part-time degree course on economics and finance. And during that period, okay, it was the crisis that actually really bailed me out from my job. Okay, and if you look at my job, right, what am I wearing? Okay, is a fireman suit. Okay, so during that period, I have to be a fireman, and I have to fight fire, because in this oil and gas industry, right, fire is very common. Okay, you can have fire, every month. Okay, every month you have fire. Some alarm ring, I have to put up the fire suit, and I have to go and drive this fire engine to the place where the fire actually occurred. So what happened is, during that period, I was thinking, hey, why do I have to be in this place? Okay, why can't I be in aircon place? Why can't I be in this like a comfortable office to to earn money, right? Okay, I rather sitting down with a computer and make money out from the computer. Why am I have to be fighting fire, such a dangerous job? So after that, what I do is, in 2009 there was a this 2008 there was a crisis, and 2009 the market recover very strongly. There was a bull market. Okay, so what happened is I make money, and I decided to quit my job as a technician and join this Phillip Securities as a broker. Okay, so within 3 years, from 2010 to 2003, within 3 years, I become the top 10 stockbroker of the company. Okay, and with this, right, okay, every year I get this award, and also I've shared with a lot of people different kind of strategy, how to look at the charts, how to look at the market, okay, how to study the market. So every time I keep on sharing. From now, I easily conducted more than 500 seminars, and have more than 10,000 investors attending my class. Okay, and more than 5,000 have paid like like a high fee, okay, for attending my class. Okay, so over the years, okay, I've built a community, I've built a lot of followers, and also a lot of these people, they really like our sharing, and they see that, this is really the way that they can actually apply. Okay, easy to follow. They can apply, and they can also find the logic out of it. Okay, and not much of a stress. Okay, so I've been through a lot of up and down. I know that investors have a lot of anxiety, because the market is very volatile. One day it was good, the other day it will crash like crazy. So how do we manage the kind of risk? How do we have a mind of a trader? Okay, so over the years, I've been sharing all this. okay, with our followers. And that is the one of the event that we did recently. Okay, and it was a full house event. So over here, okay, you can connect with me, okay, through my social media. You can look at the NDU from YouTube. Okay, you can see, like these are some of my sharing, okay, on my YouTube, which right now is about near close to 20,000 subscriber. Okay, and we are still building up this community. So over here, over the years, I also have been sharing on the TV, okay, Money Week program, Singapore Radio, Channels News Asia. I also, like uh, on this City Plus, this Malaysia FM. Okay, also open my own branch. Okay, so this is one of the first franchise branch. Okay, first franchise branch in Phillip Securities. And during this period, right, okay, where we open, okay, a lot of people tell me, hey, this uh, why do you open a branch, right? Okay, so during that period, it was my dream, okay, to have a shop, okay, to have a shop, a physical shop by ourselves. Okay, so basically since 2015, we have been running this branch until today. And also, what all these, right, awards, all these interview, all these big events, okay, is actually because of the experience. Okay, because I have this experience in looking at the market. And that's why people always like to follow our this analysis. Okay, so today what I'm going to share with you is also something that I've done for many years, I've done for many people, which is analysis of the market. Okay, so this Okay, so this is also a financial industry awards. Okay, where okay our group, right? Okay, our group, this group affiliate satellite office, Jurong East, right? Okay, Westgate. So this group, our group, right, actually accumulated few hundred millions, okay, in terms of the customers investment. Okay, few hundred millions. So over here, okay, this is one of the awards that we recently received. Okay, 2024. So basically, what I'm sharing with you here is not theory. Okay, it's not theory. A lot of time you look at YouTube, you look at there's a lot of theory, but over here, okay, today the sharing is based on experience. Okay, so it's a bit different from what you see from YouTube. Okay, so of course, I also published a book. Okay, but with this book, okay, this book called Win Big, Lose Small. Okay, this book I published in this 2019. So if you want to find out more about my strategy and all that, you can look out for this book. Okay, you can Google Win Big, Lose Small, NDU. Okay, so today, okay, our topic, okay, navigating, okay, market uncertainty. And I just want to go through with you how in this challenging, uncertain market, with the election, with the interest rate, what does the market data actually tell us? Okay, so over here, okay, the first thing, okay, you got to write down, okay, you got to write down, okay, is the US election. Okay, the US election is happening on 5th November. Right, 5th November. And over the years, okay, we have gone, we have like studied this US election. So what this US election actually meant for the stock market. Okay, so over here, okay, if you look at some of this data, right? Okay, this data, right, it shows you what? It shows you S&P 500 has posted lower total returns in presidential elections years. Okay, so what does it mean? Okay, what does it mean? Okay, average and median total returns of S&P were modestly lower in presidential election year compared with non-election year. Okay, with the long-term average of the 96 years performance. So wonder, if you wonder how would this year and the next year be, okay, this year and next year, right? Okay, one of the data actually go through over the past 96 years observation. Okay, usually, okay, the presidential election year is averagely lower than the what we call the medium annual return. Okay, medium annual return. So if you look at the data, right? Okay, also, right, this is one of the data that we pick out online. Okay, it said that higher returns before election, lower returns after. Okay, so right now what are we facing? Okay, we are facing a lower return. Of course, it's not saying that it definitely go negative, the market going to crash. Okay, I'm not saying that the market definitely going to crash or going to crash. Just that, okay, on average, okay, if you look at like the median return like 11%, 10%, 14%. Okay, these are the like average return of the S&P 500. Okay, so what do you look out for is upcoming, okay, in November, in next 6 months, in the next 1 year. Okay, in the next 1 year, the market will have much more volatility. Okay, much more volatility than before the election, because before election what's happening is the incumbent party is having the power. Okay, having the power, so there's no change in power. Okay, there's no change in policy, everything is very stable. Okay, so what if the incumbents party lose, right? So there will be change in power, change in policy, change in the budget. Okay, so there'll be a lot of change if this Joe Biden's party lost. All right, am I right to say that? Okay, so the data shows here. Okay, shows here. Okay, the stock market may have anticipate, okay, or respond to a weaker economic condition near the end of a presidential election year, given the higher likelihood of recession following the 12 months, in the following 12 months. Okay, so basically the next 12 months after this presidential election, right, is likely to have this what we call recession. Okay, so and then this thing, right, this data, right, quite true, because right now the market already talk about recession. Do you agree? The market already, kind of like telling, maybe there's a recession, That's why, they pray that this Federal Reserve faster cut rate. Okay, so in other words, okay, this thing is not new. Okay, it's not new. Okay, there is a pretty high chance. Okay, in fact, based on the study in this article, right? Okay, you say 25% during the election year there's a recession. 25% after the election year there's a like a recession. So if you add up this period together, right, okay, so by right now we should be looking at this recession, and then next year, okay, also potentially, there will be some kind of like a recession data or recession fear that is going into the market, going into the news. So that's why, we say that the market is uncertain, the market may have more volatility. Okay, so over here, okay, so what is the solution, right? What is the strategy for volatile market? Okay, so since we know that this S&P 500 is going to be volatile, okay, so over here, okay, number one is diversified asset class, right? Diversified asset class, right? Like stocks, like commodities. Okay, if you notice what's happening in the market, the tech stocks and the commodity stocks, right? Sometimes they go up and down. When tech stock is up, those oil and metal will go down. Okay, when tech stock is up, maybe the gold price, gold stocks might not perform as well. But when the tech stocks is down, right, sometimes this oil stocks, sometimes these oil futures will go up. Okay, so they are not correlated. Okay, not correlated. So if you want to have a stable kind of a portfolio, diversified asset class will give you the cushion. That means they don't go up together and they don't go down together. So goals, okay, different like futures, okay, REITs, dividend stocks, okay, these are the what we call a diversified asset class. Okay, and another strategy, right? Is this thing called diversified strategy. Okay, so this one, right, is something that I learned from one of my this mentor. Okay, he also helped me to write the forward of this book. Okay, his name is called Tom Basso. Okay, so Tom Basso, right? I was, a few years ago, I emailed him. I said, hey, Tom, can you advise me, like how we can, smoothen our chart of our this what we call portfolio equity chart. Okay, he said, if you only have one strategy, then of course you will have a big swing, because one strategy don't always work. A single strategy don't always work all the time. Okay, so sometimes you need to have long-term strategy. Okay, so this long-term strategy is, let's say, buy on the dip, drop, then you buy. Okay, midterm strategy is what? Midterm strategy is, oh, I'm going to catch the trend, and the trend is midterm. So trend following strategy is midterm. Okay, so when we buy, oh, only uptrend, then we buy. So that is the midterm strategy. Okay, and then short-term strategy. Right? Short-term strategy means, or you buy already and then you scalp, you sell quickly, you sell away quickly. That's a short-term strategy. Okay, so there's also long only strategy. That means this strategy only buy, they never sell. Okay, never sell short. So that will be, like example, some people they have this long-term long only strategy. Okay, that means they buy and hold for investment, just like our property. Right, like you the property investment. Okay, this property investment is long only and it's long term. Okay, so this is a long term strategy. This is a long only strategy. So that's why a lot of people in Singapore, they make money from property. Yes, right? Okay, so in the stock market or in the futures or in the gold, okay, can you do long term, long only strategy? Yes, right, you can, right? And what about long and short? It means, okay, it's a midterm, okay, midterm, long, short strategy. Means uptrend, you buy, okay, and downtrend, you short, okay, uptrend, you buy, downtrend, you short, uptrend, you buy, downtrend, you short. Okay, so this kind of strategy, right, you can actually go and back test whether it work or not. Okay, before you apply. Okay, before you apply. So if you are good in some programming, if you are good in Excel, you can use some technique to back test the data. And before you do that, okay, I mean before you trade this long and short strategy, you can actually do a thing called back test. Okay, so number three, okay, run a diversified portfolio. Okay, a diversified portfolio among different sector. Okay, different sector. So during uncertain period, during a volatile market, volatile market means up, down, up, down, up, down. Okay, you want to have a diversified, different among different sectors as well. Okay, so how about interest rate? Okay, so just some first part, right? We talk about this presidential election. Okay, so the data shows that the market it's going to be more volatile, and the market is tend to focus more on this thing called recession. Okay, and how about interest rate? Okay, so interest rate, right? If you look at what is happening, flying around all this news, you will understand that everybody is cutting rate. Okay, everybody is cutting the interest rate. US, Australia, UK, and of course all these, everybody except Japan. Everybody except Japan. So everybody is cutting the interest rate, and that is the trend right now. Okay, the trend is expected to persist into the following years. That means 2025. What do you think? Okay, 2025 also probably will sing the same song, or will continue to play the same music, which is cutting rates. It will be cutting rates. So over here, okay, this is probably one of the most important chart of this event. Okay, this event. Okay, my favorite page is actually this one. Okay, my favorite page is this one. So if you want to take a picture, you can take a picture of this. Okay, so this one is the US Fed fund rate. Okay, and total assets versus gold price. Okay, so if you look at gold price since this 20,000, sorry, not 20,000, 2000, year 2000. Okay, so year 2000, the gold price, okay, was less than 300. Okay, and then after that, okay, from 202, it go up and up and up, go above 600 by this 207. Okay, and 208, okay, it actually went up to almost 1,000. Okay, almost 1,000. And 2010 go above like 1,002. Okay, and then went all the way up. So there was a bull market for the gold price. Okay, bull market for the gold price. And this is a big trend. Okay, this is a big trend. And this big trend, okay, took how many years? So from 202, 204, 2006, 2008, so about 8 years, right? Almost 8 years for it to run. Okay, so during this period, you actually see what's happening here. Okay, during this period, what do you see? This is where the Fed fund is cutting rate. Okay, I remember during this period, I think it's what Alan Greenspan. Okay, so the Federal Reserve is cutting the rate. Okay, cutting the rate, cutting the rate, cutting the rate. So when the rate is going down, gold price, okay, going up. Okay, and this one has been going on for, okay, for a long time. Okay, what about 2016? So 2016, the interest rate go up. Okay, interest rate go up. What's happening here? The what we call the gold price didn't really drop. Okay, didn't really drop. Okay, so a lot of people were wondering why, how come the gold price never drop? Okay, that's because I would think lah, right, that's because US, right, is always borrowing. Okay, US is always in the deficit, right? So the US dollar, okay, is not the best currency. Okay, I mean, in terms of preserving value, it's not the best currency to preserve value. So even though this interest rate is up, okay, because it didn't up a lot, this gold price also didn't really crash. Okay, didn't really crash. And during this period again, okay, when they cut the rate, okay, when they cut the rate, because of what? Because of COVID. Okay, because of COVID. So what happened? The gold price also, okay, also went up. Okay, went up. Okay, and of course during this period, okay, what's happening here is Bitcoin had a huge rally. Okay, so Bitcoin, is some people are talking about this like a decentralized, they don't want this the to buy gold, and so Bitcoin was catching this cash, right? So people diversified their money instead of going to gold, okay, they go to this Bitcoin. So Bitcoin took some money, okay, off this gold investment. Okay, you understand? So basically, right, all these asset class, they also want the money to flow into this asset class, right? So during this period, okay, gold price wasn't that fantastic, okay, wasn't that up a lot, okay, because what? Because Bitcoin is kind of like the trend, okay, the trend. But if you ask me, right now, right now, okay, do we still fancy Bitcoin? Okay, actually not that lah, okay, not that fancy, because recently the performance of the Bitcoin is not as good as gold. Okay, it's not as good as gold. The gold, in fact, right, the performance is more stable. Okay, it's more stable, and better. Okay, better as in more positive if you just buy and hold. Okay, if you buy and hold, it's more positive than the like a during these few months. If you look at these 2 years, these few months, gold price is much more stable than crypto Bitcoin. Bitcoin is too volatile. So if you are somebody, okay, who wants to hold like big amount of gold, okay, big amount of gold, okay, if you want to put money to preserve, okay, you wouldn't want to put everything in crypto. Okay, but a lot of billionaires, they do not mind to put money in gold. Okay, especially during this period. Okay, especially during this period. So over here, okay, do remember this: interest rate go down, gold price, okay, is up. Okay, so this is the biggest value that I want to share with you today. Okay, so while the market fluctuate, gold stands firm. Okay, could it be your next big move? Okay, so if you look at during the 1970s, 1980s, 1990s, 2000, 2010, 2000, until today lah. Okay, this is what happened lah. Okay, over the years, over the years. So what I see here is, actually, if you look at gold price versus S&P, okay, in fact, actually their performance is as good, okay, is as good lah as this S&P 500. So what does it mean? It doesn't mean that you shouldn't buy S&P. It doesn't mean that you should sell away all your stocks and put everything into gold. It means that when you have a diversification, okay, when you diversification, you put some money into gold, okay, you put some money into gold, you will have a more like a like a balanced portfolio, right? Balanced portfolio, and without sacrificing the returns, the rate of returns. Okay, because why? Because some people they say, hey, faster I will put some fixed D so that it's very safe. Okay. But today what we're not talking about, whether the fixed D can make money or not. We're talking about the inflation. Okay, what if the inflation is very high? Okay, what if the inflation, it didn't stop, right? It continued to have a high inflation period. Okay, will the fixed deposit still good in the next 5 years, 10 years, or 20 years? Okay, so think about this, right? So over here, gold have been one of the instrument that actually hedge against this inflation, where from long time ago, okay, people use gold to hedge for inflation. Okay, not all the money, but maybe a part of their portfolio, Okay, so factors that's driving gold to prices up. Okay, first of all, uncertainty, economic uncertainty. Do you think right now we have a very certain economy? Do you think the market talk about a recession? Okay, so do you think the market is very worried about inflation? Okay, so when I look at all these things, I realize, hey, looks like there is a reason. Okay, there's a reason. Okay, and this reason is pretty clear. Okay, pretty clear. Okay, do you think that like this geopolitical tension, is it there? Okay, yes, right? Okay, yes, right? Okay, and these are the reason why this gold price has been strong over the past 1 year. Okay, do you think the US dollar has been going down? If you look at Sing dollar right now, Sing dollar is very strong towards this USD. Okay, so USD have this like a big swing, okay, recently. So over here, inflation. Okay, inflation, I will say that definitely will come back again. Okay, even though this interest rate up and down, and they're talking about inflation is down, but the real inflation, is always there. Okay, and we over the past few years, if you look at how much you spend on your meals and your travels and all these okay, daily expenses. Okay, inflation is no longer at 2% or 3% already per year. Okay, so over here right now we are in a high inflation period, high inflation era. Okay, so looking for returns. Okay, what can we make out of our money is more important than preserving the money in a safe way. Okay, so that's my view lah. That's my view. So for me, I look out for, what are the things that can give me the higher returns. Okay, so that I can still be ahead of the inflation. Okay, and of course, this number 5 is this monetary policy, interest rate. Okay, so interest rate will have significant impact on this gold price. Okay, so over here, so I share with you this, what's the relationship, right, between interest rate and gold prices. Okay, so first of all, okay, this thing is called inverse relationship. Okay, so inverse, what does it mean? Okay, when interest rate is high, the gold price become less attractive. Okay, so gold price become less attractive. Okay, why? Because gold doesn't earn interest, so the money will stay in the bank. Correct? Because bank will pay you 4%, okay, interest, 3% fixed D, right? Okay, so when interest rate go down, okay, gold become more appealing. Holding gold become more appealing since the opportunity cost is lower. Okay, that means, okay, today, if I know that, the bank also don't pay much, and wow, gold price got chance to go higher. So what I do? Okay, I will take the chance. Okay, I will take the chance to do trading. Okay, do trading. Okay, so diversify my portfolio instead of everything put fixed deposit. So over here, okay, when interest rate goes down, the returns of the cash is lower. Okay, so people will have don't mind to actually buy gold. Okay, so real interest rate, okay, nominal interest rate as low, inflation is high. Okay, so the real interest rate can be negative. Okay, making gold appealing as to preserve the purchasing power. And this is what I talk about, where the bank's interest rate went down. Okay, the fixed deposit will go down, but the interest rate is the what we call the inflation is high. Okay, so to preserve the value of your money, especially like US dollar. people will also move into gold. And the next thing is this thing called QE, okay, or maybe cut interest rate. Okay, so when the what we call Federal Reserve cut rates, or maybe have this quantitative easing, when they print money, this is the time where this what we call currency devalue. So which means the US dollar, might like have this devaluation, and this is the thing that drive the gold price up. Okay, so again, I keep repeating this thing. Why? Because you want to get the idea correct. You want to get the idea correct so that you can see, okay, you can see what is happening. So when some news come out, okay, you understand. Oh, there's a geopolitical tension, or some news come out, you know that, oh, cutting rates again, or maybe cut some more, maybe cut some more. Okay, so when this non-farm payroll is bad, maybe there's a recession. Okay, so you understand this scenario, and when all these things happen, you have a better idea of the direction in terms of the bigger trend in the next 6 months, in the next 1 year. Okay, so over here, I just quickly go into how you can get started, okay, investing in gold. Okay, I just quickly go into this. And over here, just now, okay, there's one thing called swap rate. Okay, some people they might not understand. Just now, Sam actually mentioned about swap rate. Okay, so swap rate, right? Okay, to my understanding, is a borrowing rate or lending rate. Okay, so when you borrow money, of course you have to pay interest, correct? So this is in these futures, right? They call it swap rate. Okay, so when you short, okay, when you short sell the let's say the gold futures, okay, so that is the lending. You lend people the money, right? So you receive, okay, you receive. So swap rate is basically whether you are borrowing or you are lending. Okay, so this is like when you long, okay, you're borrowing. When you short, you are like a lending. Okay, so when you talk about this like a what's the advantage of this, okay, a perpetual gold future? Okay, so perpetual gold future, right, the major advantage, right, is this margin requirement. Okay, so it's about 5 to 6%, and just now they mentioned that it's 25 times leverage. So 25 times leverage means what? Okay, means your power, okay, your $1 the power, right, is actually become $25. Right? So the power of your cash is bigger. Okay, so you do not need to change so much money to have the exposure in gold. Okay, as all of you probably know that gold price actually is actually traded in a US dollar. Okay, so if you need to buy in US dollar, okay, you don't need to change like 25,000 into USD. Okay, in fact, you can use much lesser. Okay, maybe like in fact, instead of 25,000, you just need 1,000, because the leverage is 25 times. Okay, and you can have this what we call exposure. Okay, this trading exposure. You understand? So the money that require for you to make money, okay, the capital, no need so much. Okay, you don't need so much. Okay, so some example, okay, just some example. Okay, so the traders, okay, need to deposit much smaller amount, 5 to 6% of the total contract value to open a position. Okay, if the spot price is 2,000 per ounce, okay, and you want to open 100 ounce, so by right, the contract value, right, is 200,000. Okay, 200,000. So this 200,000, okay, if you want to upfront take out 200,000 USD to have this 100 ounce exposure, okay, exposure. So do you want to change your Sing dollar to USD or not? Okay, of course not, right? You don't want to change so much Sing dollar to USD to buy this contract value. So 5 to 6% means what? Means, okay, instead of trading futures, okay, futures, spot futures, gold futures require 20%. 20% means 40,000. This is if you trade the spot gold future. But with the Apex perpetual gold future, right, 5 to 6% is means only 10 to 12,000. Okay, so during with a 200,000, you only need a 10,000 exposure. Okay, so some of you might also understand this thing called, the initial capital is actually lower and there's no expiry. Okay, so over here, this is a very important thing, okay, to a long-term investor, okay, or maybe to somebody who, don't want to have so much stress. Okay, so if you are like a beginner, okay, and you look at the futures, okay, futures, they will expire, right? Okay, so when they reach the expiry date, okay, if you are losing money, how do you feel? You feel that, yeah, I have to close this position and then open again. I have to realize my loss. Okay, realize my loss. And this can be very painful for some long-term investor, because all they want is to hold on, okay, hold on to the position. They don't want to close the position. Okay, so when you look at this, okay, no expiry, okay, it means what? It means it's actually good for some people who just want to hold on, okay, just wait for the price to recover and just sell when they make money. Okay, just sell when they make money. So if no make money, as long as they can hold on, it doesn't require a lot of capital, they can have a longer holding power. Understand? So this strategy, right, is for people who want to have a longer holding power, longer period to hold, and also, don't want to trade in and out, every month or what. Okay, so over here, okay, does it require, of course, does it require you to pay some financing fee or not? Okay, as I said, the swap rate, okay, is some kind of a financing fee, borrowing cost. So example, okay, this 2490 times 100 ounce, okay, 249,000 contract value. Okay, the swap cost, okay, based on the website, is $20 per day, okay, to keep this 100 ounce gold position open each day. Okay, so the annual swap rate, okay, you have to pay 7,300, which is calculated to be 4%, okay, 4.4%. So if you understand this idea, right, okay, this 4.4%, okay, is actually very low. Okay, it's actually very low. If you look at some CFD provider, okay, the CFD provider I am using, okay, is I'm paying 8% right now. I'm paying 8% for this like a CFD contract, and some of my contract is like 100,000. Okay, so you ask me 1 year how much we actually pay, okay, so it can be like 20,000-30,000 in terms of this financing fee. Okay, financing. So if you ask me 4.4%, is it expensive or not? I tell you, this is very cheap. It is very cheap because for CFD, for those stocks, right, is 8%. Okay, is 8%. So 8% is the normal rate right now. Okay, very normal. Okay, 8% is very normal. So 4.4% is very low, and they give you 25 times, which means what? Which means you don't need to, put up so much of a capital. You don't need to put up so much of a capital. So which is very attractive. Okay, very attractive. So if you ask me, is it good for holding long term? Okay, I would say why not? Okay, this is considered a very low financing fee for now. Okay, for now. So over here, okay, as I said, when you're a buyer, you pay the swap fee. When you're a seller, you receive the swap fee. So when you go through this presentation, you go through this learning training, okay, you just keep this in your mind. Okay, if you short sell, oh yes, you can receive the swap fee. Okay, so over here, overnight fee, there's some kind of a small little overnight fee. Okay, and also if you look at the commission, these are really a very low commission lah. Okay, so it's if you buy a stock, okay, buy stocks, right, in some of the stock, stock trading account, sometimes is as high as $25 or $15 USD per transaction. Okay, per transaction. Okay, so over here, this is per site, per lot, and overnight fee is almost negligible. Okay, so basically, the fees wise, right now it is a promotion, okay, very promotion. So if you compare, I would say it's also very attractive. Okay, so do you need a lot of money to trade gold? Okay, so that is the one of the commonly asked question. Do you need a lot of money to trade gold, right? Okay, so let's say, okay, you are somebody who are interested in buying gold. Okay, what is the common way? The common way is you go to the goldsmith, the gold shop, right? And then you buy one piece of gold, correct? Okay. Have you all done that? Okay, have you done that? I have done that. Okay. Some people have baby moon. They have a new baby. Sometimes we buy this like a gold chain, right? Okay, for their kids. Okay, this gold chain, okay, or this gold pendant, okay, gold pendant. Sometimes it's just 2.5 grams. Sometimes it's just 5 gram, 3 gram or what. The kind of gram already costs like $200-300 Singapore dollar. Okay, and the whatever fees that the goldsmith actually make, right? Okay, is through the design, and so the margin, the what we call the expenses of investing on a physical gold, right, is as high as 20-30% of the gold value. Okay, so basically investing in the physical gold is one of the least productive way of investing. Okay, so what is this? Okay, so with this 1 ounce, okay, 1 ounce, okay, market price of a gold, right, is, let's say, 2,490. So 1 ounce is something like this. Okay, something like this. So if you look at 1 ounce as compared with the gold that you buy from the gold shop, okay, what is the margin required if it's 5%? Okay, if it's 4%, 5%, what is the, okay, 25 times? So 25 times is only $140 USD, which means this is your minimum capital. But of course, you need to put a bit more cash. So which means at least you put $500 USD into this trading account. Okay, you can start a small trade. Okay, you can start this journey. Okay, you can start this journey, and this journey doesn't end here. Okay, if you make money in the long run, you want to buy more, can or not? Okay, you can buy more. You can buy 2 ounce, you can buy 3 ounce, you can buy 4 ounce, you can buy until of course, okay, buy as much as you can for the long run. Okay, but over here the good news is the starting capital do not need a lot. Okay, do not need a lot. And this goal, okay, this goal previously, when interest rate is high, it doesn't shine as much. But when interest rate go down, or when there's this kind of a recession news, okay, that means upcoming, when the market or the Federal Reserve announce rate cut, when the Federal Reserve announce this what we call like a QE, okay, all this okay, so that will actually boost this gold price. Okay, so in other words, okay, I mean, in the long run, I would say, it's a good knowledge that or it's a good skill that how to do this gold trading. Okay, it's a good skill. Okay, if you only know how to trade stocks, that's one skill. Okay, if you also know how to trade or buy some gold, that is another, like a different skill. Okay, it's a different skill. Okay, so things to consider before investing in gold, right? Okay, investing in gold can be a prudent choice to enhance your portfolio stability and resilience, especially during uncertain times. So this one is what we say that diversification. Okay, diversification. So you don't just like everything put with the insurance, everything put with a fixed D. Just don't put all your egg in one basket, right? So gold, okay, is it worth investing or not? Okay, gold, is it worth investing or not? Okay, so this is one of the billionaire. His name is John Paulson. Okay, so if you look in the internet, okay, in this interview with Bloomberg, okay, Paulson actually talked about this gold. He said investors should have at least 5 to 10% of their portfolio in precious metal. Okay, he believed that gold is a hedge against inflation, safe havens asset that retains its value during times of economic uncertainty. Okay, so if you ask, like, hey, Andy, why you have confidence? I say all these people, they are not like, they just want to make money tomorrow. Okay, they are not like like short-term trader. They are talking about like in a longer time frame. Okay, in a longer time frame. What about if somebody like like give you to buy a property in Singapore? Okay, buy a property in Singapore, you don't need what ABSD, don't know, you just need 5% of the money. So 1 million you only need, 1 million you only need 40,000. Will you want to buy or not the property? Yes, why? Because in Singapore, long run, Singapore property is uptrend, correct or not? Okay, but do you have such a deal in Singapore? Of course not. So now, if you buy a Singapore property, okay, you need a second property, you got to pay ABSD. If you're a foreigner, or you got to pay stamp duty. Okay, so you understand what I mean? All these things, I'm not I'm not a expert in this property, but what I'm saying here is, if something you know that is long run is good, or maybe the next 12 months is potentially good, okay, so what do you need is to know that how you can manage the risk and how you can participate in such a trend. Okay, so over here, this is a Ray Dalio. Okay, so Ray Dalio, right? Okay, in this 2024, okay, he actually talked about, like, this gold. Okay, billionaire Ray Dalio opts for gold in 2024. Okay, so if you look at this, I believe it would be both risk reducing and returns enhancing to consider adding gold in one's portfolio. So Ray Dalio is also a billionaire, okay, billionaire hedge fund manager. So if you know him, right, you realize that he is very good in economics. Okay, he's he can explain this economics very, very well. Okay, so over here, this is also one of the things that you must know, okay, before you invest in gold. Okay, so today, right, due to time constraint, I'm just going to share with you a simple strategy. Okay, this simple strategy, right, okay, I believe most people can apply. Okay, and today, due to time constraint, I also don't need this strategy, right? Don't need to look at the chart. Okay, don't need to look at the chart. And this strategy, right, has actually also made my client, okay, millions of dollars. Okay, my client have made millions of dollars through applying this strategy. And of course, this is very different from what you learn from the internet or YouTube and all that. Okay, nobody actually share this strategy. Okay, nobody actually share this strategy, but it's a very, very simple strategy. Okay, so there's 3 steps. Okay, 3 steps. Okay, so number one, this strategy, right, is a long-term strategy. Long-term strategy. So this long-term strategy, there's a few things for you to okay to know. Okay, to know. Okay, so number one is you must be able to wait for 6 to 12 months. Right, 6 to 12 months. So I have this client, okay, when he want to trade, okay, when you want to trade, he always observe. Okay, always observe. He spend most of his time observing, okay, observing the price movement. Okay, observing the price movement. Okay. And he have the cash. Okay, he have the cash. And his cash is like how much? Like 3 million USD. Okay, he got 3 million USD. So when he buy something, okay, buy the stocks, buy the company or what, right? Okay, this same strategy. Okay, he look for something that is not downtrend. Okay, it's not downtrend. That means in the long run or in the short term, it's sideways, up, down. Okay, don't move too much one. Okay, not too volatile kind. Okay, he prefer those kind of a thing. Okay, that means not downtrend. Okay, not downtrend. Okay, in the long run, it is slightly uptrend, not volatile, not technology stocks. Okay, not technology stocks. Okay, something that is very boring one. Okay, very boring. Okay, like bank stocks, like like gold, like this. Okay, so these are the boring thing. Okay, that long term is not a big problem. Okay, not a big problem. Okay, not like those what we call the very downtrend stocks. Okay, not like that. Okay, so he allowed the price to swing. Okay, so sometimes, okay, what happen is he will buy and he will hold. Okay, he will hold. Okay, of course, if make money, he will sell. Okay, if make money, he will sell. And he target very simple, just 5%, 8% each time. Okay, if you make 5%, 8%, right, is actually about you think about 3 million. Okay, 3 million. 5% is 150,000. Okay, 10% is 300,000. Okay, 300,000. 300,000 enough or not? To him, enough already. Okay, so 1 year he only do 2 times. He only do 2 times. Understand? So this strategy, okay, what is very important here is you must allow the price to swing without getting a margin call. And also you have additional cash to top up when the price fall. Okay. So of course, this strategy nobody will tell you, okay, in the market, because it's too boring. Okay, it's too boring. And this is actually the rich people strategy. Okay, the rich people do it this way. Okay, they do it this way. They buy something, okay, whether is it gold, whether is it oil, whether is it even Bitcoin, they want to hold until they make money, because this is just a small part of their portfolio. They have another, 90 million out there. Okay, this 3 million is just, one of the investment. Okay, understand? Not? So this investment, okay, that this strategy that my client actually apply over the past 8 years, he has been with me. Okay, he almost make money every time. Okay, of course, there was once he lost money, but what happened is he hold, he hold until it recover. Okay, he hold until it recover. So that period can be like 1 over years, like 1 over years. But as long as he is making money, he is compounding his money every time by 5%, by 5%, by 5%. Okay, so over here, how he do it? Okay, how he do it? Number one, okay, he buy on dip. So when price drop, then he will buy. When price go up, he will never. Most of the time he won't buy. Okay, most of the time he won't buy. So 90% of the time he buy when the price drop. Okay, price drop. And he always sell when the price is extended. Sell when the price is extended means what? Means the price go up. Okay. And again, did he look at the chart or not? No. Okay. He don't know how to look at the chart. He don't know how to look at the chart. He only use his phone. And what is his strength is he's very familiar with the range. Okay, he's very familiar with the range. Oh, always up to this price. Oh, always drop to this price. Wow, this is the lowest of the past few months. Okay, so he always look at the price range, and he have a very clear idea, what is the range of the movement, the asset. Okay, so he also prepared to have a 2 to 3 entry. That means with his 3 million, okay, sometimes he buy 500,000, sometimes he buy 1 million, sometimes he buy uh you know uh you know all in. Okay, sometimes he all in. Okay, and he only buy one thing. He don't buy like a 20 stocks. Okay, he don't buy 20 stocks. He only buy like one. Okay, one only. Okay, so over here, okay, sell when price is up for many days. Okay, so when price go up for many days, he usually sell, and he's not so greedy. Okay, he sell when there is like a 8% returns. Okay, 8% returns. Okay, and then he wait for another opportunity. Okay, so be familiar with the average swing percentage. Okay, you know that, oh, this gold price swing how much? Okay, 5%, 10%. Okay, so when price drop, 5% is cheap. When price drop 10% is very cheap. Okay, so you know that the cheap and expensive, the range, what is the range? And of course, okay, risk management. Okay, so if you have more cash, a lot more cash. Okay, some people say, the margin call can be your stop loss. Okay, that is true. but try not to do that. They will trouble the broker. They will be very worried for you. Okay, so if you are trading a leverage product, okay, if you're trading a leverage product, try to, okay, have a stop loss. I try to have a stop loss. And if you have limited capital, you try to have a stop loss. Okay, if you have unlimited capital, always top up. Okay, then that's not a problem. Okay, that's not a problem, because this is just 1% or 2% of your total asset. So you can afford to have this kind of a drawdown, okay, for long-term investment. So position size, okay, risk a small percentage of your total capital, okay, in every single trade. So that is what we call risk management. So over here, this is some example, not example lah. This is the client. Okay, this is the client. So this client, okay, he's actually a Malaysian. Okay, Malaysian. So when he make the money, okay, I actually deliver the check to him, okay, okay, so that he say, hey, I want to buy something, I want to pay for my employee, I want to buy some present for myself. Okay, so I will withdraw the check. Okay, I will give him, that's the two trade. Okay, two trade. One trade make 1 million, so he withdraw. The other trade make 1 million, then he withdraw. That was in 2023. Okay, the finger is the same. That's my finger. Okay, so over here, okay, this is how some rich people they trade in this kind of strategy. Understand? So over here, today, okay, basically, it's a very short session. I try to give you as much as I can, but due to limited time, okay, basically, that's all I share with you. But before we end here, okay, this event, okay, basically, what's the next things you need to do? Okay, the next thing you need to do, right, is to have a trading account. Because if you have all the information and if you do nothing about it, okay, that will be still zero. Okay. And everybody starts from a beginner. Okay, so if you haven't start to have this trading account, Phillip Nova, okay, this is the opportunity here. Okay, you can scan this QR code. Okay, you can contact us, you can type in the chat. Okay, let us know how we can help you to have this Phillip Nova account so that you can kickstart your trading journey. Okay, by the way, if you got any questions, please feel free to ask in the chat right now. We still have a few minutes later on for Q&A. Okay, so by the way, today we have a special offer for every one of you. So today, right, if you open a trading account, right, if you want to know how you can get started with this trading goal, okay, how you can get started, okay, I'm opening up a follow-up event. Okay, and this follow-up event, right, is a 30-minute special Zoom meeting with Nova team. Okay, I've arranged with Simon, okay, Nova, okay, from Phillip Nova, and this is how you can get started trading perpetual gold future. Okay, and today, right, okay, we only open 5 slot only. Okay, only 5 slot only. And today, if you open a trading account, okay, you can also get my presentation slide for today, which is worth at least 39 US dollar. Okay, so over here, actually I have a few more slides to share, but due to time constraint, I will not be able to share with you. Okay, as you can see, I have hidden a lot of the other slides. Okay, because we do not have time to go through all this. Okay, so over here, okay, if you I will do it up, with all these data, all these slides. Okay, so if you open a trading account, this is will be one of the gift lah. Okay, I will make it nice, and then I will send you this slide deck. How about that? All right. So yes, that's the end of my presentation. So if you got any questions, okay, regarding the accounts trade, regarding the trading, do let me know. Okay, and once you have sign up, okay, let me know also. If you want to join this what we call 30 minutes what we call special follow up session. Okay, so yes, that's all for me for today. Okay.
Hi, Andy. Thanks for your comprehensive presentation just now. I think the attendees have a few questions. I'll just mention it here. Given that gold is often seen as a hedge against inflation, how do changes in interest rate influence its effectiveness in that role?
Okay. So change in interest rate, and how does it change the effectiveness? Okay.
Yes.
So first of all, the inflation, right? Number one, right? Okay. Right now, of course, the market data, CPI data, all this, they might say that the inflation is down. Okay, but the truth is the people around us, like example in Singapore, okay, they are very used to increase in the price, okay, over the past few years, okay, and this pattern, right, of increasing in price, right, will not will not stop until the economy collapse. Okay, so this inflation, right, will continue to go until until people really have problem paying. Okay, so as long as, okay, people still have money to pay, okay, this inflation will continue. Okay, continue. So whether or not effective or not this goal, okay, you got to look at the percentage gain, okay, whether is it effective or not. So example, if gold price, okay, if this this gold price, if you look at like the past 1 year, okay, past 1 year. So past 1 year, how much is the movement of this gold price? Okay, so let me just see. Okay, so let's say like let me just use my NDU chart. Okay, so if you look at the past 1 year, okay, the gold price actually move, okay, move like a 35%. Okay, move like 35%. So with this like 35%, okay, you might think that hey, just 35%, just 35%. Okay, is it a lot or not? Okay, actually, with the 25 times leverage, is a lot. So you think about this, okay? Your $1, okay, is it effective if you just buy a single piece of gold, or is it effective if you trade it with the future, with the future? So the most effective things to hedge against inflation is our experience and our knowledge. Okay, our knowledge. So when we learn something new, when we do something that help us in the long run, like when we educate ourselves, when we see all this data that I show you, you look at the history, okay, that is the best hedge for inflation, because you know that, oh, there's a chance here, there's a chance here. So if gold price continue to go up, what if gold price took over the trend and perform better than crypto? Okay, what if this gold price move like crypto, what if, can this thing happen or not? Possible or not? Okay, possible. Okay, if crypto can be like this, okay, what about gold price moving like 30% a year? What about 60% a year? What about 100% a year? Okay, can gold price double or not? So if it double, okay, what will you do? What will you do? So that's the kind of thing that we think about lah. Okay, so that is the thing. There's a lot of what if, and we, based on our, have we have an account already or not, trading account? So have you funded the account or not? So if you want to catch this, do you know how to place a trade or not? Okay, so that is the thing that you can do to make it more effective. Okay, so after you actually learn about this trend. Yes. Okay, I hope I answered the questions. Okay, if not, you can ask in a different way. I try to answer again. Yeah.
Thank you, Andy. There is another question also about gold and also interest rate cut. The attendee is saying about how does gold compare to other safe haven assets like bonds when there is an interest rate cut? Should investors or traders diversify into other assets or focus on gold itself?
Okay, so for bonds, right? First of all, if you talking about Singapore, okay, Singapore, the minimum size of a bond is 250,000. Okay, so if you want to buy a bond with cash, okay, you need 250,000 cash. Okay, and when you put up this money, you also need to choose whether is it like a good bond or not. Okay, and what is the interest or not. Okay, and these bonds, right, based on my experience, okay, because I sell bonds, okay, I sell bonds. Okay, previously I sell a lot of bonds until there was once, okay, I sell this company this bonds, right, 250,000. Initially it was good. Okay, it was one of the biggest logistic company in Singapore. Okay, it was good. Okay, my customer is very happy with the 5% returns, okay, per year. 5% return a year, very happy. Okay, but suddenly a China company took over this, one of the Singapore biggest logistic company, and they start to sell their assets. And suddenly these bonds become like a junk bond. It become junk bond. And I was worrying, whether it will collapse or not. Because when bond you lose 100%. Okay, so in terms of whether you should go into bonds, I would say, if you want to go into bonds, at least you must have like 3 million cash to buy a 250,000 bonds. Okay, and again, uh I would say, is the good thing about this goal, right, is you can start small. And you can leverage big lah. Okay, that's a good thing about this goal, perpetual goal future. Yeah. Yes. Yeah. Again, any other questions?
Thank you, Andy. I think that's all for our questions, and then let me take over for this part. I think thanks for Andy's comprehensive presentation again. And then, as you may know, that Phillip Nova is offering the Apex Gold perpetual futures, and the commission is from as low as 40 cents. The contract comes with no expiry, low margin, and with more than 20 times leverage. You can scan the QR code here to get more details. And at the same time that Phillip Nova is offering the different kinds of promotions covering futures, forex, and any other products that we are offering. So you can also scan the QR code on the left-hand side to get to know more. And then if you are more interested in the educational resources that we are providing, you can also scan the QR code on the right-hand side to explore more webinars and seminars that we are offering. I think thanks again for Andy for the presentation today, and also Sam's for introduction of the Apex. See you guys for the next round of the webinar. Thank you. Good night. Bye bye.